The Fed is running out of time, and I'm going to explain why. But before we do that, let's recap what happened last week on Chicago PMI. Now, this is one of the easiest trades for the month of October. So if you followed the interest rate cut, which was delivered about a week, 1.5 weeks ago by Jay Powell and the Federal Reserve, you should know that the Fed cut 25 basis point interest rate, which was fine. It was pretty much baked into the markets. The other thing is that they eased on the quantitative tightening, meaning that the reduction of the balance sheet has come to an end or a pause. Now, both of these actions or policies, on one hand, are signaling to the markets that they want to ease financial conditions in the United States of America. But what happened after, during the press conference and the speech which was delivered by Jerome Powell, will shock the markets. Jay Powell said that a further reduction on the policy rate in the December meeting is not a foregone conclusion, meaning that don't expect a rate cut in December. This was a punch in the face for traders and investors. And the reason why is because the Fed is currently flying blind. There is absolutely no data coming out from the United States government, no unemployment rate, no NFP, no labor market data, and if you know that the Fed has a dual mandate to protect. The first one is price stability, meaning that they should manage prices to be stable, i.e. control inflation. The second one is full employment. And if there is no data from the labor market, how can they fulfill their jobs? And this is why Jay Powell said, enough, stop the brakes, we're not going to deliver any more rate cuts because we don't know where we're going. They are flying blind. And because all of this, the Chicago PMI last Friday was one of the easiest trades. If you're new to the Alpha FX Academy, we have a private members Discord. And how it works on high impact days, I deliver a morning briefing to the members. This is a live Zoom meeting where I explain what's ahead of the day and how you should approach complex financial data or economic data. Now we have the morning briefing, or after the morning briefing, if I enter into a position, I posted it in Discord the way you see it on the screen right now. And I knew that Chicago PMI is coming up. Now before the Chicago PMI, in the morning briefing or just before the PMI, I delivered a scenario analysis. Now this is very important when you trade economic data. You must know how to approach the data which is going to be printed. You must know what to do when the data is high. You must know what to do when the data is low. What if the data is beyond the standard deviation? Now with this preliminary analysis and everything that I did in order to prepare the traders, it was the easiest trade this month. So Chicago PMI came out higher than expected. Now it wasn't extremely high, but it was significantly high enough to push gold down about 500, 600, 700 pips, and we managed to catch it. But of course we needed to know the Fed's stance on monetary policy and what they expect in the near-term future. And because Jay Powell said that don't expect any rate cuts in December because we don't know where we're heading, that the government is now shut down, the Chicago PMI with the higher data, it was the easiest sell on gold. Now, if you want to join the Alpha FX community to get signals like this, to understand economic data and be part of one of the greatest trading communities, head to alphafx.eu, check the links below the video. Now, there's only 5 memberships till the end of the year, so if you miss it, you won't be able to join until next year, February. And now I'm going to deliver to you exactly the same or similar analysis as I did for my members in the Alpha FX community. Now this analysis is going to be similar to what I delivered in the morning briefing today for the VIP members. If you would like to join and to get signals like the members every single day and before the high impact events, if you want the front running positions, my personal positions, go to alphafx.eu. £59 for a month, less than a daily coffee. Stop wasting money on cheap signals and learn how to trade markets. Going back to the chart, you can see that price is in a downward sending market. It's not a bear market yet because it's not, 20% loss, which is characterizing the bear market, but you can see it's moving down, creating lower highs and lower lows. But in the last 1 week, it started to move sideways. Now, the Chicago PMI last week, as you can see in investing.com, in the calendar, you can see it came out 43.8%. Now, this is not significantly higher than the forecast, but is high enough to push down gold if you look at the previous data. And of course, the previous data was revised as well. So what it did after Powell's commentary that don't expect rate cuts in December, yields started to move higher again. The 2-year Treasury yield came down as low as 3.41% 2 weeks ago, but since that it started moving higher again. Now, yields are the alpha and omega of financial markets. If you're not following yields, you are missing out and you don't know how to trade financial and economic data. You must always start your analysis with the yields. The fixed income market is far greater than the stock exchange or the stock market. So fixed income market, i.e. this is the smart money market, and you must follow the yields because yields are going to determine every asset price in every market. When the Chicago PMI came out, I sent out a sell signal. Previously, I was in a buy, closed in a few hundred pips profit. And then when PMI came out, before the PMI or at the PMI, I changed to a sell. And you can see that the position was running at close to 500 pips. So once again, if you want daily analysis and daily signals like this, go to alphafx.eu. So going back to the economic calendar, let's see what do we have. Now, today is 4th of November, and so the next data is going to be jobs job openings. Now, this is how many jobs have been advertised in the US. It's not the job creation or how many jobs have been filled. This is just simply an advertisement number. So this is the weakest of all the data this week, but it's still something that we can trade on. Now, if you follow jobs job openings, you know exactly that in the US, the number of jobs advertised is still very high, above 7+ million. But when you look at the other data, which is how many jobs have been actually created, the situation is even worse. So the next one after JOLTS in rank is ADP non-farm employment. And ADP non-farm employment is a private payroll data. It's not an official statistics, but because this is the biggest payroll management company in the US, this is a significant gauge about the health of the labor market. And you can see that previously this data was negative 32,000. So even though the jobs job openings was very high, the actual data signals that there is no job creation in the US. And if you follow the market, you know that previously the US has lost almost 1 million jobs due to revision. So from this perspective and what I explained about the FOMC press conference and the commentary from Jay Powell, the market is signaling that gold is going to further sell off. So going down to the technical analysis, because now I explained all the macroeconomics and fundamentals, what I know, because we're flying blind and there's actually no data. So what we have to do is, instead of focusing the data, which we don't have, focus on what Jay Powell said. And we have important data, focus on the data and take into account what Jay Powell said. So given ceteris paribus that we have no data, we're going to start the analysis with relying on what Jay Powell said. So Jay Powell said that don't expect rate cuts in December, which is going to send gold further down. Now that we have clarified the macroeconomics and fundamentals, all we have to do is move down to technical analysis and look for entries. Now currently gold is moving sideways in this upward sending channel, which looks like a bear flag to me. Where should you sell gold in a bear flag? You always start with your Fibonacci, swing high to swing low, and the 50% is going to be the sweet spot where gold is going, or any asset is going to react to a bear flag. You can see that the 50% is somewhere around 4,022 and current price is at just below 4,000. Now this is perfect because you can see it's Tuesday, but the daily and weekly pivot is closely aligned. This is another confirmation for a sell. Now, because the market is moving down, what I do is I sell at important price levels, for example, the daily and the weekly pivot, and targeting, let's be reasonable and target the previous low, because from here you can expect a pullback. So pull out the market, pull out from the market and close any profits you can before it's too late and you have to endure a pullback. So let's make the profit target 3,900. That's very reasonable, strong psychological number. So this is the first selling point. The second selling point is obviously the 50% Fibonacci, but we don't know whether the market has actually started selling off already from the 50% Fibonacci. It looks like it did because price could not break the 50% Fibonacci at 4,022. So even if you enter at this price level, at the current price level, as I did this morning. You can see this is my live MetaTrader, and you can see I entered into a sell position now, and I placed the stop loss well above the 50% Fibonacci price level, or above the 50% Fibonacci price level. And I'm expecting price to clear this zone at 3,900. So if the first entry fails, I'm just going to re-enter at the second one. Remember that ceteris paribus, considering that nothing else has changed in the market. So I'm not expecting too much change in Georgia openings either. And because the Georgia openings is just a number of jobs have been advertised, I don't care if JOLTS come out strong, and I don't think the market is really care about. But if you have a very big JOLTS opening, so let's say 1 million less jobs being advertised, that's going to be the opposite signal to the Fed, and the Fed had to really consider, it's going to be a reassurance that they really need to deliver another rate cut. So in case if you have a weak JOLTS openings, 500 to 1 million less than it was before, then gold might going to break this resistance level, but the chances for this are very, very thin. So more probability on a strong JOLTS number or the number of job openings being consistent is, I'm expecting that. So even with a strong JOLTS number, I don't think the market is going to care. So I'm going to stick with the sells. And here's the actual position I entered this morning with the AlphaFX members. This was a live signal which I sent out to the Discord, and you can read all the trade details from this chart. Now the next one is going to be Bitcoin, because I know how much you love your cryptocurrencies. Now Bitcoin in the last few years is just another composite of the Nasdaq because of the ETFs. The correlation coefficient is very high, so Bitcoin is pretty much moved the same way as. So when you look at the market, you can see that it's fairly similar. It is fairly similar to gold. It's moving sideways after creating a new all-time high at 125,000. Now, most of the traders who look at the market, they see, oh, there is a support, I must go long. But no, the lower the price gets in a downward trending market, sell every support. Sell low and buy high. This is my mantra. This is what I teach to people. First, you identify the market conditions and direction, then you look at the macroeconomic and fundamentals, then you move down to the technicals to look for entries. And every time I see in a downward sending market or downward going market, I see a support, I simply sell, immediately sell. So what I'm going to do now is I'm going to pull up my Bitcoin chart right here, and I'm going to enter into a Bitcoin sell, 0.25. I'm not trading too much risk on Bitcoin. And the target should be, where should it be? Target previous high. You look left on the chart. Let's call it 100,000, 99,000. That should be reasonable. So I'm expecting more downward movement on Bitcoin, and boom, already in 100 pips profit as soon as I enter into the market. Stop loss, I'm not really using stop losses, but because of good education, I'm going to put stop loss around 106,000. Because I have a low position, I can afford to have a wide stop loss. But if you trading on a margin account, or if you have a larger position size, you have to be very smart with the stop loss. But I think 105,000 is still a very reasonable. And you know what? I'm going to enter into another position as well. Two positions have been entered on Bitcoin. Just to show you on the chart exactly where it was, I'm going to move to a higher time frame. Yep, price should drop below 100,000 very soon if the prevailing market conditions continue to exist. Once again, if you want to get daily analysis delivered straight to your Discord when I enter into a trade, go to alphafx.eu. Thank you so much. This is the AlphaFX.